Hey guys, Sarah Investments. It's a lovely Sunday afternoon here. Not sure what day you guys will be seeing this. I hope you guys are enjoying your quarantine. Just thought I'd check in with you guys, talk about what's going on. The market's been crazy. Is it going up? Is it going down? Kind of been somewhere in the middle, just floating around, trying to find where it's going to go. One thing I would caution against is don't go all in. Take it slow. You're going to have time to invest. You're going to want to put your money in slowly in waves. Definitely, it's going to be a bumpy ride. You don't want to try to time the market. Start buying now, but buy slowly. Watch where you're putting your money. Cost average your way down. I don't think we've seen the end of this. I don't think we're at the bottom. It's pretty crazy. Just about a week or two ago, we saw Bill Ackman saying that hell was coming, and it's hard not to think so when you look at everything that's going on. It's a lot more serious than, the coronavirus itself, but you have a lot of people who are out of jobs, a lot of businesses that have closed down. Who knows if some of these businesses are going to open back up and once this is all over, if they're going to have the money to be back in business. And if they're not, that affects their livelihood, their employees' livelihoods that are most likely either furloughed or been laid off entirely. And it's definitely something that's concerning. We're going to see a lot of crazy things happen. In my opinion, I think at the moment, unless we find a miracle cure or things change fast, this will probably be worse than '08 long term. '08, people were still working. People had jobs. Some people are still working at the moment, but there's a lot of people who aren't, and unemployment's extremely high. This is bringing the economy down to a complete halt. It's something that I've personally, I've only been around for 25 years, but something I've never seen. So definitely something we're going to want to keep an eye on, kind of see what's going on. Other takes, Warren Buffett just sold his stake in Delta Airlines and Southwest. Now, that being said, these are industries that have gotten pretty beat up. But he was willing to take a loss at the beginning of this downturn. He was buying some shares just when they started dipping down pretty hard, and when they were down about 10%. So for him to cut billions of dollars in losses, in my opinion, either signifies that maybe he's looking at them as not a good investment long term anymore, but also maybe that there's more downturn to come before things get better. And that's really where I'm thinking of this going. If we look back at previous moments, I like to pick on Buffett just because, he's A, my favorite investor, but B, also has been able to be pretty successful over time, just like a Berkshire Hathaway stock. But we look back the way he did in '08, and he started buying a little bit late. He offered financing early on. He definitely waited his time to jump in the market and make sure it was the right time. But one thing that we want to make sure that we do is just be very strategic. You want to watch these huge hedge fund managers, the investing upper echelon. You want to see what they're doing, not necessarily buy what they're buying. I'm not saying copy their strategies, but they definitely have a lot more insight on what's going on. They have figures and numbers that we don't have access to. So when they start buying in heavily, that's when we know that there's probably a bottom coming soon. No one can time the market, but historically speaking, they buy when it's rather close to the bottom. So definitely just keep an eye out, stay the course, don't sell out of anything unless you absolutely have to. Losses are going to probably continue, so definitely expect that. But suggestions I have for everybody: if you have a 401k, make sure that you're contributing. This is a great time to be contributing, especially if you want a cost average. Every single paycheck just automatically gets put in there. Make sure you're taking advantage of any contribution match by your employer. That's huge. It's basically free money. They're giving you money for putting in money. Really hard to beat that. Even if things went down 50%, you're still right at where you want, where you put the money in, as long as you have a 100% match. So definitely a good thing to take advantage of. One other thing that I wanted to really suggest is possibly look at increasing those contributions. Definitely don't go crazy. Don't put 50% of your paycheck into the stock market yet. But look at putting a little bit more. If your employer, say, has 3, 4, 5, 6% match, consider putting it a little bit past their match, 8%, 9%. And then, as things progress, even when we start to slowly come out of this, that's when you're going to want to start increasing your contributions even more. And of course, if we ever get back to those record highs, you want to start tapering them off. But definitely a crazy time to be alive, and just seeing everything that's going on. A lot of my friends personally that I know of have been laid off or don't have income and are looking at trying to make ends meet. And that's really when a lot of what I'm talking about, and what the doomsayers are talking about, is really going to come to light. Is when those people that don't have any income but would still have bills, have car payments, credit cards, home loans, rent. When you start seeing them not be able to pay that money, and when you see businesses that they can't pay their bills, those are the base level and foundation of our society, and you're going to see ripple effects across the economy. Churn rates are going to be really, really high, and write-offs and charge-offs, and you're going to see a lot of things get really, really cheap. But financing is also likely going to be very hard to come by. Probably going to run into a credit crunch. A credit crunch is basically where there's a shortage of liquidity in the market. There's just not enough money floating around, and money gets very scarce. And it's dangerous to loan in the environment, so a lot of people will flat out stop lending. Some credit card companies will start reconsidering, basically how much you owe them and how much you make and what your risk is and the risk assessment of you. And some, back in like 2008, for example, companies were clipping credit, and they passed that threshold of where they deemed you safe, and they sent you a lovely letter saying, hey, sorry, but can't do business with you anymore. We're closing your line. You still owe us the money, so please keep paying, but we're closing your credit card. And it's definitely going to be pretty crazy. I think the biggest thing that you're going to see is when Q2 earnings come out and people see just this massive loss of revenue for businesses across the board, especially for those small businesses. That's when I think you're going to see the real sell-off. We've seen a huge plunge, but I don't think, I think we maybe have another 20-30% to go, and that's honestly, I think that's best case scenario. This is assuming we pull out of this and we're able to combat the coronavirus within say 2-3 months. If we're looking at 6 months, if we're looking to the end of the year, we could be looking at depression. Kramer was talking about it, and he said there would be a short-lived depression that we could be seeing. But it's definitely a real possibility. It's some scary stuff. You definitely want to try to conserve. You want to get lean. If you have a job right now, if you're having income come in, definitely focus on paying off things that are recurring debts that you have. Try to pay off the things that have the least balance and the most payment on it. For example, interest matters too. If you have something at 26-27% interest, you want to pay that off. But at the same time, if you're looking at just from a purely cash flow perspective, if you have a $400 payment on your car per se, and you only owe $3,000 left, and you have $3,000 on a credit card, but your credit card payment's only $120 a month, it's probably going to be a lot easier for you to come up with that $120 every month than that $400 every month. And even though you're likely paying a much higher interest rate on that credit card, financially, it might be better to pay more in the long term to have that access to cash flow and having that free money to then, once you get that car paid off, you're able to work on those cards. If you, for any reason, lose your income, you don't have to worry about it, coming up with as much money. So definitely just something to consider. Interest rates aren't always the thing that matters. Focus on cash flow at the moment. It's going to get rough, guys, but stay the course. I really hope you guys are taking this time to reflect, get a good plan together. Things could get better. We could just see, them come up with a cure, that they could prove something. You never know, but at the same time, you definitely want to work with what information you have. And who knows where this is going to go. I'm trying to avoid getting any sort of political comments involved or any politics on this channel. This channel isn't about that. It really doesn't matter what your opinions are on things, what my opinions are on things. This channel is really just to focus on how to improve yourself, your own financial standing, and at the end of the day, politics, we can only control so much. Yeah, you can vote, but you want to make sure that you're able to really focus on the controllables, what you have direct control over, which are your finances, your life, and making sure that you have that underlocked first, and really making sure that that's taken care of. So yeah, guys, this is just a quick update that I thought I'd do with you guys, just share my thoughts. Hopefully next week we get into some real financial learning and discussions, try to get a whiteboard for you guys. But here's the goal of this channel here. Become the 1%. Work hard, make money, help people. That's what this channel is about. It's what I'm hoping that inspires everybody to do. So thank you for watching. Sarah Investments. Have a great day.